May I use that?
Okay. We have activity 9. Trade receivables. We said on 31st of December 2017, face and ledger contained the following balances. Trade receivable was 20,000. Then allowance provision made for the for irrecoverable debt was 3,340. The allowance provision for irrecoverable debt consisted of a general allowance, which is £800. That is expenses on its own, which is specific. Now, we have 3 trade receivables here. We have DSWAT, we have Cohen, and we have Beck. During the year ended 31st December 2018, the following transactions these are additional information. DSWAT was declared bankrupt, and the payment of 95 was received. So, on 30th of April, 95 was received out of 420 that was owned by owed by DSWAT. On 15th June 15th, FESA was advised that the full debt due from Joe Cohen, included in the trade receivable at 31 December 2017, was irrecoverable. So it went bad. So Cohen didn't pay at all. On 3rd of August, Beck paid the amount he owed full. So 3rd of August, Beck paid. So Beck is not part of. So Beck is not part of the trade receivables anymore because he paid. Do you get the point?
Yes, trade receivables money need to get paid. Money that's received.
That the credit customer has to pay back. Yeah. Money expected from
customers.
Okay. So now we have just we have SWAT and Cohen for trade receivables. So our trade receivable account so we open the trade receivable account. So for January 118, balance brought down is 20,000. That's the total of trade receivable. So we have irrecoverable debt from SWAT, which is 420. We have irrecoverable debt from Cohen, which is 1,200. So 1,200 plus 420, you minus it from the trade receivable, which gives us our balance carry down of 18,380. Mm-hmm. So the new trade receivable for 2019, 1st of January 2019, will be 18,380. Now, according to the additional information, 5% of the year-end trade receivable will be the provision for the irrecoverable debt. So our new irrecoverable debt provision made is 5% of 18,380. Mm-hmm. So 5% of 18,380 is 919. So now we have to open allowance for irrecoverable debt accounts. So the allowance for irrecoverable debt, which was made in your statement of profit or loss, we have 919. That is the new allowance made. That is the new expenses. So allowance for irrecoverable debt accounts, you're going to have on the debit side statement of profit or loss, which is 919. The total for irrecoverable debt made was 3,340. So 3,340 minus the new allowance made, which is 919, will become our balance carried down for 2,421. So 919 minus the balance of irrecoverable debt, which is 3,340, gives us 2,421. So the allowance for irrecoverable debt will have a balance carried down of 2,421. Okay. Is that clear? Is it clear, please?
Yes.
Now we open irrecoverable debt accounts. For irrecoverable debt account, we have SWAT and Cohen. But on 30th of April, SWAT, there was on 18th of July, so we have 90, for 30th of April, SWAT was owing 420, and Joe Cohen was owing 1,200. This is irrecoverable debt account. So you have to debit trade receivables and credit anyone who paid.
Trade payables.
If they paid.
Trade payables. Credit trade?
No, you credit not trade payables. Trade payable is your supplier.
Oh, trade, no.
People bank pay. Or cash.
Bank or cash.
But here, in our irrecoverable debt account, we have a payment made of 95. Yeah. So for Cohen, on 30th of April, Cohen was owing us 420. But 18th of July, we received 95
from him.
From Joe Cohen. So if Joe Cohen, if SWAT,
not Joe Cohen,
SWAT, yeah. If SWAT didn't pay £95, if he didn't pay,
it will be in recovery.
So we would have our statement of profit or loss to be 1,620.
Yes, but he actually paid.
He paid 95. So 95 will be taken away from 1,620.
Yes.
So 1,620 minus 95 becomes our statement of profit or loss.
Loss 1,500.
1,525.
Okay.
So that is our statement of profit or loss.
And Mr. Even if 95 was not paid, it would have went to the other account, trade receivables.
Yeah, no, it will be here.
It will be here.
As 420, you have 1,620 because we only have 2 irrecoverable debts.
That's okay.
So here on the credit side of your irrecoverable debt, you're just going to have statement of profit or loss as 1,620.
Okay.
But now we can't have 1,620 because SWOT paid 95.
Okay.
Was recovered. So for the amount paid by SWOT, we'll call it irrecoverable debt recovered for 95. So you take it away, that is the irrecoverable debt. So the balance in the irrecoverable debt is still going to be 1,525.
Okay.
Do you understand?
Yes.
So that means SWOT is owing 3,325 and core N is owing 1,200.
Okay.
Do you understand? So your irrecoverable debt, your balance brought down.
Brought down.
In your statement of profit or loss, you're going to have this. So your statement of profit or loss, you're going to have this figure as your irrecoverable debts.
Okay.
Is it clear now?
Yes.
So that ends chapter 3.
Mr. Example 10, when should we do it?